Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is September 9th, 2025, and we're diving into the latest earnings report from Bioceres Crop Solutions, a leader in agricultural productivity solutions. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Bioceres has been navigating some challenging waters, and their latest report gives us a lot to discuss.
Revenue and profitability overview. Let's start with the top line. Bioceres reported a revenue of $74.7 million for the fourth quarter of 2025, which is a significant 40% decrease year over year. For the full fiscal year, revenue was $335.3 million, down 28% from the previous year. John, what are the main factors behind this decline?
The decline in revenue is primarily due to weaker demand in Argentina, which is one of Bioceres' key markets. The company faced challenges such as a slowdown in the agricultural sector and a transition in their HB4 business model. Despite these setbacks, the gross margin remained relatively stable at 39%, thanks to their higher-value proprietary products.
Operational efficiencies and future outlook. Despite the revenue decline, Bioceres managed to generate a net cash flow from operations of $53 million for the fiscal year, a 27% increase year over year. However, they reported an operating loss of $14.9 million for the quarter and a net loss of $55.2 million for the year. How is the company managing these challenges?
Bioceres is focusing on operational efficiencies and cash generation. They've implemented cost control measures and adjusted their working capital management, which helped improve cash flow despite the decline in profitability. The company is also reducing its CapEx and R&D investments to align with current market conditions, which should help stabilize their financials moving forward.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 10 cents for Bioceres, based on a survey of 2 analysts. The company met these expectations with an adjusted EPS of 10.10. John, what does this tell us about Bioceres' performance relative to market expectations?
Meeting the EPS forecast is a positive sign, especially in a challenging year. It indicates that Bioceres is managing its costs effectively and aligning its operations with market realities. This performance, despite the headwinds, suggests that the company is on a stable path and could potentially rebound as market conditions improve.
Management strategic initiatives. Bioceres' CEO, Federico Trucco, mentioned several strategic initiatives in response to the current challenges. Can you elaborate on these initiatives and their potential impact?
Absolutely. The company is targeting a 10 to 12% reduction in operating expenses and has cut its CapEx and R&D investments by 50%. These measures are designed to preserve cash and maintain operational flexibility. Additionally, they've extended the maturities of their convertible notes and are making leadership changes, including searching for a new CFO to better align with their financial and commercial priorities.
Key takeaways. In summary, Bioceres faced a challenging fiscal year with a 28% decline in revenue and a net loss of $55.2 million. However, they managed to improve their cash flow by 27% year over year and met the EPS forecast of 10 cents. John, what are your final thoughts on Bioceres' performance and investment prospects?
While the financial results reflect significant challenges, Bioceres' strategic initiatives and cash flow improvements are encouraging. The company's focus on cost management and operational efficiencies positions it well for a potential recovery. Investors should keep an eye on how these strategies unfold in the coming quarters.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Bioceres' performance in the comments below.